Hi everyone, welcome back to the channel. It's been a couple of months since our last analysis, but in this month's analysis I'm as always going to walk through a really high level broader market overview, cover all of the major indexes, asset classes. I'll cover mega cap tech going into earnings season, as well as 15 individual stock ideas that you can add to your watch lists for the month of February. Also with some price targets as well. Now it has taken around 20 hours to prepare, present, edit and upload, so I do hope you find a lot of value from my hard work. For those of you that are maybe new around here and you've just stumbled onto my work, hopefully the Scottish accent isn't too difficult to understand. But before I get into the charts, the market over the last few months has been really incredible. If you've picked up our analysis either on Twitter or our work before Christmas, hopefully that's aided you in some way. The Muppets of Wall Street and mainstream media keep telling us that Armageddon is just around the corner, and of course if they've kept you out the market last year, hopefully my work can maybe set you on a better path, and hopefully it makes some sense going into 2024, because it's not just 7 stocks that are going up. The biggest stocks really only help the major cap weighted indexes, but the way that I've always learned it is that the best players really should be scoring the most points. But let's not dwell on the past. It's a new year, it's a fresh start. Let's start looking forward. I think most of you know by now that I'm neither a perma bull or a perma bear. I'm always open to all outcomes with the market. Over the last 15 months, our work has been really bullish with our clients. I'm going to be sharing many of my favorite charts at the moment from our client chart books with you. But please understand that managing risk is always the priority. My work is not geared towards buy and hold forever, unfortunately. But with some of the charts, for disclosure, myself or our clients may hold positions in some of the names mentioned, but I have highlighted those disclosures as well as some time-stamped charts as well. If you're new to the channel, I like to use a combination of technicals and fundamentals. I'm a huge advocate of systematic process. Most of you know by now that I do not use any magical hindsight indicators. I timestamp absolutely everything, which is massively important. I'm not one of those analysts that make broad market calls before they play out 6, 12, 24 months later. I'm one of the very few who go on the record with their work, and like I said a moment ago, I timestamp absolutely everything. My work is for most folks. I think if you are an everyday investor, trader, options person, financial advisor, money manager, my work really is geared towards everybody. I have clients in most of those areas. I'm looking for structural trends that last weeks to months. I'm primarily a trend follower, a little bit of swing trading here and there, and I use logical price targets. If we sat and had a beer together, I'd probably tell you that I'm personally more of a technical investor, but like I said, my work does apply to most styles. I'm told my technical work is of the absolute highest quality and that I can put it up against anyone, so I do hope you find some value. We've got clients at most of the major investment banks now, but please do pause the video. Very important disclaimer before we get going, and don't forget to smash the like button and subscribe. It all helps with the YouTube algorithm to get things a little bit more noticed. And I do have an important announcement just at the end of the analysis here as well. So let's just dive into the charts. I think the logical place to start is with the S&P 500. Now, there is this narrative that the yield curve's inverted, so we need to crash. Now, if this chart for the inverted yield curve has kept you out the market for the last 18 months, this is a chart that I think mainstream media have been battering to death, but what I just want to draw your attention to with this chart is, and this is something that obviously I've prepped our clients for already, is it's not the inverted yield curve that is the problem. It's when we come out of the inversion and we start to steepen and we come out, as the chart shows, that's the signal. So whilst the market is obviously making new highs, and I will get into the major indexes in a moment, but just for those of you that are being kept out the market because you're worried about yield curves, etc., it's something that I'm very, very aware of. But at the moment, the signal has not triggered. So for me, it's really in an environment where stocks are going up, and I think it's silly not to participate in that. I'm sure we've all got our different views. I'm sure some of you watching this will be bearish in the market, and I get it. But for me, the signal is when we start to come out and we start to steepen and move above zero. We're not there yet. So obviously, we've got the S&P 500 coming into a massive couple of weeks with earnings season. I'm sure we're all looking forward to the shenanigans and the ups and downs. But just to highlight some of the names that are going to be reporting over the next week, I think there's probably some of you that are looking, certainly super micro, on Monday after the market close. We've got the likes of Microsoft, AMD, Google, Starbucks, Boeing, which has been beaten to death recently. And then obviously Thursday's the big one where we have Apple, Amazon and Meta all reporting after the market close. So what I would say is technical analysis is great, but what we can't predict is what the reaction is to the earnings. I'm sure we all have our views, whether or not you think that stock is going to report good earnings. It's the reaction to the earnings that gets quite frustrating. That it's when we get great earnings numbers but the stock still falls away. Those are the frustrating scenarios. So we'll see what the reaction to the earnings is. That's more important to me than the actual earnings. But at the moment, the S&P 500 is now officially closing at new all-time highs. Now, something that I have been very, very vocal about is the under the surface damage that the market's had over the last 6 weeks. We can see from the market breadth data that the new 6-month highs list actually peaked in December. So what we're seeing is a leadership role being taken, I think, from a lot of the mega cap tech names, and I will get into the likes of Nvidia, etc. in a few moments. But don't be fooled. There is a lot of under the surface damage with the market, so there is always rotation. Again, I will get into that in a few moments. But at the moment, whilst the S&P 500 is going out at new all-time highs, whilst the Dow Jones Industrial Average is going out at new all-time highs, whilst we have the triple Qs going out at new all-time highs, it's very, very difficult to present a completely bearish thesis on the market. What we know about all-time highs is we can start new bull market on the back of it. So the hope is, at least where I'm sitting at the moment, is that this is the start of a new trend in the market that has started 15 months ago, back in October. But new all-time highs is not a bearish signal for the market, despite what some folks will have you believe. But what I would say, and this speaks to the narrative of the under the surface damage. Those of you that follow me on Twitter will know that over the last month I've been very, very vocal about the breakout that we had recently in the Russell 2000 and how we simply can't trust it, especially if you look at the performance of stocks at the back end of last year. A lot of those small micro cap names moved anywhere between 50 and 100%. And when you get a breakout in the major indexes, when stocks have made 50 to 100% moves, you simply cannot trust it. So the failed breakout that I was fully expecting, anticipating, played out. The small caps declined around 8-9%. There has been a little bit of a rally over the last couple of weeks, but we are still stuck in this sideways range. But if we do see a scenario where the mega cap tech names, for example, that are reporting earnings that have already ripped to the upside, like Nvidia, AMD, etc., if those stocks start to take a little bit of a back seat, which I think would be very healthy, very normal, very logical for the market, I'm looking now at potential rotations, whether that rotation goes into the more cyclical names or whether it goes into some of the smaller micro cap names. This is something that I'm watching with a lot of interest over the next couple of weeks. We've got the NYSE Composite Index. Whilst the Dow and the S&P and the Qs have made new highs, it is still quite interesting to me that the NYSE Composite hasn't made new highs yet. There is obviously an overseas component to the NYSE Composite, but again, very, very similar. The new highs list peaked in December, but we do have the Russell 3000 very, very close to joining the breakout party as well. So I think if the Russell 3000 can break out and close at new all-time highs, and again, it's just one of those charts that probably speaks to, you know, it being very, very difficult to present a bearish thesis on the market. Obviously, I've touched on the yield curve and you know, potentially that's a signal to keep an eye on. But as it stands today, we're halfway through Friday's session where I'm recording this. It's very, very difficult, as I said, to present any kind of meaningful bearish thesis. The message the market is giving us continues to be that a weaker dollar continues to be good for stocks. I've been banging the drum on this chart for a few years now. So you know, the message the market is if the dollar is going down, then stocks are likely to continue to go up. Now, one of the charts that I keep an eye on is obviously the volatility index, a really basic color coded chart that I have here. We're in the green zone at the moment. The VIX is between 10 and 20. That's in an environment where I think it just makes a lot of sense to be looking for stocks to buy. Generally speaking, volatility doesn't really announce itself in advance. But at the moment, and again, really the message that I've had with our clients over the last couple of months is whilst the VIX is being suppressed, it's very, very difficult to not be looking for stocks to buy. The 10-year note, again, for those of you that maybe don't follow my work that closely or you're maybe new, I made a really big call on the top in rates a few months ago, which has played out. I do see this continuing to move lower, but I think for most of us, I think probably, you know, something like TLT is a way to express a bullish thesis or a bullish view on bonds. With the 10-year note topping, TLT bottomed from very, very logical price levels. Again, this is a chart that I communicated months in advance, and we've rebounded exactly where we were supposed to rebound, and we are now up 20% from its lows from late last year. Gold is obviously getting a lot of airtime at the moment. The views on the market, for me, I think are a little bit mixed. I think the gold still needs to prove itself to me. It's one of those areas that just kind of chops and moves sideways for long periods of time. As the chart shows, this is a longer term monthly chart dating back to the 90s. The Fibonacci levels for this particular chart have a lot of merit, as the chart demonstrates. But for those of you that are bullish on gold or looking for a gold position, like I said, I think the market does still have to prove itself. I think above 2100 there is the level for gold. I think the gold ETF is still very, very close there. This is a weekly chart for GLD. I think if there's a confirmed close at some point in February above that 193 level, then I think gold will probably be in a bullish environment. But that leads me into, I've got around 25 individual stocks here that I want to kind of walk through. A lot of the big names, some of the names that I think are setting up technically. But if you are still here, tells me that you're getting a lot of value from this analysis. So please do smash the like button. Like I said before, it does help with the YouTube algorithms, etc., and helps to get my work a lot more noticed. But I think the logical place to start, I think, is with Amazon. Now, like I touched on a few moments ago with the map for the earnings season, Amazon, I think the report on Thursday after the market close, again, for me, this is a very textbook Fibonacci chart. You know, whether you use Fibonacci or not, it's not really, you know, it's not a big deal. You can just use basic support and resistance levels. But for me, I am still working with 190 targets, but I don't know what the earnings reaction is going to be, as you will hear me drum into you over the next 10 minutes. The earnings reaction, I think if we pull back on earnings, I think it needs to hold that 147, 150 level. But ultimately, I do hope to see our target achieved here at 190. This is a chart that's obviously in our members chart book. But yeah, it's currently a bullish chart. I think Nvidia is getting a lot of airtime as well. Again, it's another Fibonacci chart for me. Made a big breakout. I posted this chart to Twitter just before the breakout. So I've had a lot of questions on it, a lot of folks asking for updates on it. Again, the chart is still bullish. It's obviously a little bit overbought at the moment, so a little bit of digestion of gains is very normal, very healthy. But I suspect this is one of those names that is going to move along with the kind of AMD earnings that are due. I think it's on Tuesday. So again, we'll see how things develop there with Nvidia. Apple's another one, very positive rebound recently. Again, another disclosure, rebounded from its 200-day simple moving average. We've obviously got the news with the VR headsets or the AR headsets, whatever they're calling it, etc. So it'll be interesting to see what happens there on with the earnings and maybe what the pre-orders look like, etc. But potentially, if this can get a breakout above that 198 level, then that could be the start of a new bullish uptrend, and that looks like a bit of a bullish cup and handle chart pattern that's forming there for those of you that are into the chart pattern thing. Microsoft, again, no change to this chart. It's obviously a $3 trillion company now. I am still working with upside objectives here around $515. Now Tesla's a big one. Now this is a very messy looking chart, so apologies. Let me just quickly break this down for you. Now, capitulation. Okay, so what most of you won't realise and what most of you won't know is last year, 12 months ago, I made a big bullish call on Tesla just purely based on capitulation. Now, we've had a very negative reaction to the Tesla earnings this week. Now, for me, the chart is a very straightforward buy low, sell high chart. It's not a chart that you can expect really a trend that doesn't come with its kind of ups and downs. But what capitulation looks like, and somebody asked me this on Twitter the other day, so I just want to explain it. What capitulation looks like for me, and you'll see this with a lot of charts. You get this downtrend acceleration. So what does the acceleration look like? Well, we know that a deeply oversold market. We've got RSI deeply oversold. We have a volume profile where we have really heavy selling volume, and we also have the volatility which is spiking beyond previous levels. So for me, that tells me that we're in the kind of the realms of that kind of capitulation phase. Now, I don't use capitulation entries on, small caps, micro caps, risky names, etc. But capitulation on names like Tesla, if you ever see it in Nvidia, AMD, Amazon, etc., those are the types of names that I gravitate towards with capitulation. Now, if we forward look to where we are today with Tesla, we've obviously started this downtrend. We've had the gap down on earnings. It's not great news at the moment. There is the danger that you're catching a falling knife by buying in here. But what I would say is that the RSI level is now as oversold as it ever has been. As I record this, there is a little bit of a lukewarm rebound here, but what I'm really looking for with capitulation is some kind of signal candlestick. We're not there yet at the moment. So the hope is that this 177 level can kind of hold as some kind of support and catch some kind of rally on the back of news. But as it stands at the moment, I'm very on the fence in Tesla. I want to buy back into the stock personally, but I'm just waiting for that capitulation signal. So hopefully that kind of explains what I'm looking for there. Now, some names again that I want to get through. One of our buy low, sell high charts. This is for Coinbase. I actually presented this in our midweek halftime analysis to our clients on Wednesday, just highlighting that Coinbase had pulled back to a logical level of support. And if we are looking to take advantage of stocks that have pulled back, a tradable bottom is for me a level in the market where you can define the risk very, very easily. It's very, very difficult to always make 100% the correct call when identifying pullbacks. But a tradable bottom for me is really just something that just says, look, I can define the risk here. I think it's quite reasonable to assume that we could get some kind of rebound, and that's kind of what we're seeing at the moment with Coinbase over the last couple of days. So the hope is that this level is going to hold, and then we can start a new bullish trend. We've got Meta going out at new all-time highs. Again, that's not bearish for the stock, but again, just caution you that we do have earnings coming up on Thursday after the market closed. This was one of our high conviction ideas last year, and reiterated a buy on the back of earnings last time round, and it has broken out again. So hopefully Meta can keep going. We've got Shopify again potentially looking to break out above that $82 level. Now again, this is a Fibonacci chart. I have had to condense this chart a little bit, so it does look a little bit messy, a little bit sloppy, but the levels here are very, very clear and defined. We've been bullish above 70. It has now broken out above a pivot level at 82. This will probably move with the Amazon earnings, so just something to be aware of. Netflix, monster move on the back of earnings. Very, very happy with it. Did exactly as expected, broke out above that $500 round number level. We're working with targets up there towards 700. We've got ARM, which I think is probably basing at the moment. ARM Holdings, we have earnings coming up on the 7th of February. It has pulled back. This is the 50-day simple moving average, but it is now hovering around its 20-day moving average. So if there is a kind of rebound on this on Monday and Tuesday, then I think ARM Holdings could potentially be setting up for a bullish chart pattern. We've got Uber breaking out to new all-time highs. This is one of our charts that's in our chart book at the moment. So again, earnings on the 9th of February, but breaking out to new all-time highs. We've got Petroleo Brasileiro, pronouncing that correctly, potentially breaking out, big massive inverse head and shoulders pattern, potentially low PE ratios, quite appealing to me. Potentially DraftKings might be appealing on a breakout above $40. We've got American Airlines now. Again, this is one of those charts where I have added a few annotations just to highlight how I kind of view the market. This is one of the charts already in our chart book that I have been covering for a few months now. But again, breakout level here, it has broken out above this $15 level. So hopefully it's blue skies ahead for American Airlines. Again, solid 12 months earnings growth. There's a healthy short interest in this stock as well, up around 9%, low PE ratios. So I think American Airlines, it might be appealing for those of you that are looking for airline exposure. Disney has been basing for a couple of months already. I made a big bottom call on this one last year, but above $97. Earnings coming up on the 7th of February on that one, something to be aware of. Palo Alto Networks, another one of our stocks, potentially if we can get that kind of confirmed breakout there. I mean, I like it on a breakout above 350 I should say. CBOE, global markets. Now, I included this one in our weekly letter this week, just on Substack, which I got a few questions on. Yeah, again, it's another Fibonacci chart for me. I try not to overcomplicate things. If we're looking for breakouts, we need logical targets. It has been basing for a couple of months already, but it has put in a further breakout. And provided it doesn't, do anything and shit the bed with earnings, etc., then the uptrends continue to uptrend, as they say. So let's see how CBOE goes. Dynatrace, earnings coming up early next week, something to be very, very aware of. But again, maybe something for those of you that are looking to maybe add new positions, maybe add it to your watch lists to see what the reaction is to earnings, and maybe not taking a position before earnings, which I never advocate because it is a massive gamble. Earnings this week for AMD. Again, it's broken out to new all-time highs. This is one of those stocks where I probably do expect a little bit of digestion of gains just because of the move that it's had. But I think on any pullback, any weakness into this 160 level can probably be bought. But I think that 160 level probably needs to hold on the back of earnings. Otherwise, you run the risk of a failed breakout, which can near term look quite bad. CrowdStrike trying to break out above that $300 level, very, very close to being actionable for a potential next leg higher. But something I just want to quickly touch on is China. Now, I get so many questions because I think, certainly for those of you that follow me on Twitter, I play around a little bit with the relative strength gurus and the folks that predominantly just look for the IBD lists, the stocks that have already made 50% moves, and then people are buying in at the top. It just doesn't make a lot of sense to me. I think as I progress with my work and what it's starting to become really well known for, especially with our clients and etc., is my ability to highlight the big risk on, risk off turning points, market bottoms, market tops, etc. But I posted to Twitter last week just highlighting that I'm really looking forward to this rebound trade in China. Now, that was posted a week ago, and ultimately what I want to do is just kind of walk you through what I see at the moment in China, because I know everybody and their dog is trying to potentially get in. But FXI is pulled back to logical support levels dating back to 2008. So we've had a little bit of a rebound this week in a lot of the Chinese names. Now, whether or not it's a bottom in China, like I was saying before, with tradable bottoms, we don't know until after the fact. So if you are looking for a tradable bottom, that just means that you can, have an easy out if it's if it doesn't play out as you expected. So with something like FXI, it's pulled back to logical levels. You literally just buy it, and the buyers will either step in or they won't, and you've got a very easy out. And the risk to reward proposition by going long is off the charts. So FXI has been a big one this week for our clients, and the hope is that this is the bottom for China. We can see that the likes of Jack Ma at Alibaba is starting to buy up his stock again. So we've got the likes of JD potentially bottoming again, pulled back to logical levels. We've got Pinduoduo again above that 150 level, potentially brings in our target there at 215. This is a stock that we've been bullish on, by the way, since 110. We've got JP Morgan again potentially looking to break out to new all-time highs as well. And we're going to add in Super Microcomputer here. Again, earnings coming up with this one on Monday, but this has been a massive one over the last couple of weeks. I think this $500 round number is a big psychological barrier for any stock. So if there is a big pullback in SMCI, which I have to say I'm fully expecting just because of the move that it's already had, but the market doesn't care what I think. That this stock could absolutely keep blasting off to the sunset. There is still a healthy short interest on the stock, but something that I actually should have added in here is the chart for another chart for China that I just want to bring into focus here, and that's the chart for MCHI, which is another Chinese ETF, the very, very similar look to FXI, where pulled back to very, very logical levels. So those were two ETFs that, like I said, were presented to our clients last week. They have rebounded, but there's a lot of shenanigans that goes on with China, news reports. I'd never trust anything, but it is potentially a tradable bottom. But with any tradable bottom, like I said, you need to be able to define that risk just in case those big levels break down. But if you are still here, again, please do hit the like button. But like I said at the start, I do have a bit of an important announcement to make, especially for those of you that follow my monthly analysis on YouTube. Moving forward, you will be able to access this exclusively on our Substack. It's going to be included with our weekly letter as well. There is a link in the description for you to check that out as well. But if you are new to my work and you're kind of wondering who I am and what it is I do, feel free to jump on to our website at honeystocks.com. We have all of our transparent, time-stamped work is all laid out on the website. I only use my own charts and my own data, but just to kind of quickly show you what we provide with our memberships. We provide access to all of our premium work, which includes our premium weekend analysis, which includes our best charts for the week and also our weekend hot list. We provide access to all of our highest conviction investment ideas, which I'll show you what that looks like in just a second. We also provide access to all of our halftime analysis, which is an analysis that goes out on a Wednesday after the market close. We also provide access to a wonderful community of professionals and investors and traders from all over the world, access to all of our chart books, which cover the most liquid stocks, ETFs and commodities from around the world. And if you are new to technical analysis, we also provide access to our complete technical analysis program, which I'm told is very, very good as well for those of you that are looking to build some kind of systematic process. But just to quickly show you what our high conviction ideas look like, this is a recent idea that kind of went out for Coinbase, which was ended up being absolutely massive. Tesla, a going back to the kind of capitulation entry that I was talking about at the start, again was another massive one last year. Again, another idea for Tesla. Very, very clear instructions on the chart, and obviously another massive one for Meta going back to $120. CCJ, which was a big winner. DraftKings, another big one. Amazon, Apple. So please do check out the types of stocks that we like to recommend. They are all laid out on our website for complete transparency. All of our high conviction ideas are completely laid out. I've been doing this for around 5-6 years now, 2023, 2022. So please do make sure that the types of stocks that we like to recommend are the types of stocks that you like to buy. I'm not recommending, pump and dumps or, penny stocks. It's all really high quality stocks that I gravitate towards, and obviously my clients gravitate towards as well. But I think my work is probably a good fit for you if you've got a mid-term approach. I think if you're maybe looking to get away from day trading because it's not quite working out and it's really, really stressful. I think if you're looking to build a systematic process, or maybe you're too busy with work, life, family, maybe business, maybe you're sick of hunting around social media for ideas and you'd like to have a little bit of a home, maybe you just like to have daily access to a professional analyst as well. I provide everybody full access to me every single day in our community as well, so feel free to check that out. But I can see that I've been waffling on here for around 36-37 minutes. Like I said before, please do check out the links in the description, access our Substack, and also access to our website as well. But thanks very, very much for watching. Have a wonderful weekend, and I hope to welcome you soon. Thanks very much.